Okay, guys, so welcome back to another video. This video I'm recording after pretty much 4 5 day long gap. So now I'll be little bit more consistent with these kind of videos, showing up my entries, my mistakes, and all those things. So this is going to be a video where I'll be talking about what actually happened today in the markets. What potential moves which we could have caught, and what mistakes did I made, or the trades that I took, and all those things. So let's just get started up. So today, I just took one trade, and in NY session I didn't capture these buys nor these sells. Why? Because I was pretty much done for the day after having wins in the London session. I tried having buy stops around these somewhere around these areas, but those buy stops never got activated, and we just dumped down with NYSE. So let's just break down the moves which happened today, and how could we potentially have gotten the moves, or and I'll show you the trade which I took, right? So basically the trade which I took was in the London session, and it was at London Open. So just let's just go to here. Okay, so this was the London Open candle. The Yep. So the next candle which will be opening, which will be our London Open candle. Right before that, let's just look at what was going up on the higher time frames and all those things. Right. So basically, looking at the daily time frame, I was convinced that the daily can do little more pullbacks, right? Why? All just because of this clean traffic to the left hand side, and we can touch these touch these areas, as we already moved very much bullish, and we formed a support, right? So this was a bullish candle, and this next candle did confirm the support, right? So this next candle, the movement of next candle going bullish was pretty much anticipated, right? So this was the area which we could have targeted as per the daily time frame, which is around the 1900ish areas. And we touched the 1900 areas during the Asian session itself, right? Asian session, if you traded Asian session today, you would have got paid very well, because these trade volume candles just went up, like this was the start of the daily candle, and it just went up, no breaks, nothing else now. So that was the thing with Asian. And now let's focus upon the London session, which was my entry, right? So looking at the London session, I came upon the charts. When I came upon the charts were looking like this, right? We knew that this daily candle started up here, and just had been pushing up, right? So pullbacks made sense for me, because we had been just moving up from yesterday after FOMC, just up and up and up. There was no much significant pullback, so pullbacks made sense to me. And these consolidation area, I have been watching out this move playing out very much. Like gold, whenever it tends to move up impulsively, then it goes into a consolidation phase, and then if it had to continue, it just breaks above. Like if gold had to continue right now to go above, then it would have broken above, and we could have continued going up. Or else, if it's breaking down to the downside, it means that we can get possible pullbacks, right? So this trade was a little bit risky one, all just because we were here counter trending the strong 4H bullish candles and the strong daily candle, which was highly bullish at the point of time when this trade was taken, right? But pullbacks did make sense, and I knew that I can get an easy 1 to 1 for sure, right? So next candle, it just started to wake up and flipped, and that was basically my entry here, somewhere around here. And on the flip, and now the stop loss could be I didn't had this tight stop loss, like right now I just learned one thing from my experience, that using a tight stop loss, it is not the thing which one should try to do in the beginning, right? You should give your trade a little more room to breathe, right? Because what could have had happen is that this candle could have easily closed as a a weak bullish candle as well, and then the next candle breaking the lows of that weak bullish candle, and we continuing down the move, right? So that would have basically stopped me out. So just this was a like a previous candle highs were my stop loss, and that was like 38 pips. And so, and if you risk percentage wise, then these pips would matter, I would say. Then this area was the target for me. It was a nice 1 to 1. All I took this trade because it had high probability of playing out in my favor, right? Because of the London volume open, and that's what happened. The London open candle just went down, and I just closed out my position, and it was all good, right? So next thing which I was expecting was finding support somewhere around here to move up to retest these highs somewhere, and maybe break the highs to create new highs, right? And I sent that in the Telegram group as well, but that happened up right here. I didn't actually take it. Actually this rejection, I marked it somewhere here. So it was like kind of a little bit above, I would say. Like I just marked it somewhere here, so it was little bit above for me, right? Then I just changed that thing and marked the rejection here, right? But this thing made sense to go up to retest the highs once again, right? And then it was a NY open. So this was the NY open candle for us. I didn't take any buys because I didn't want to take any impulse entries, to be honest. After having the wins in the London session, one thing I learned over period of time is that once you got profit, you should secure the profits. You should protect your profits and capital. That's really important. So the next candle you could have entered after this broke the highs, and I'm sure pretty much that some of the guys in the group would definitely have caught it, right? And this move was 66 pips or so. So let's just talk about little bit about these entries, right? The confluences. So basically this was the daily high. So Kevin always says, I learned from him, that once daily candle is breaking the previous daily candle highs or lows, you can easily get 20 pips, and those are the easiest 20 pips you can ever catch, right? So basically these entries made sense according to that point, and stop loss was obvious just below this candle, and 25 pip stop loss, which is good according to the volume and the risk reward you're getting up here, right? So the next candle, it just did a fake out from not a fake out, sorry. It seemed like a fake out, but now it closed above this level particularly, and that was the time when I was looking to have a buy stops, right? Like I had buy stops at after this 5 minute fake out happened. I had buy stops above this candle, but buy stops never got activated, and this candle broke the low of previous candle. So I just decided to stay away from this, and this was the NYSE candle. And now, if you don't know about the magical box of mini banks, if you knew that setup, then you could have easily entered up in this trade. So I'll be showing you little bit about that, how much I know about that, right? So whatever I know, I'll share about that magical box. I'll learn it from mini banks today in the Zoom session. So what he does is that he marks the 30-minute candle before the NYSE open, and just go on the 5 minute time frame. And once these once the candles are leaving this 30-minute candle, then you can take up the entries, right? So as you can see here, this was a nice bearish close and nice bearish momentum, respecting the highs of the previous candle and breaking the lows, right? So if we can leave these rejections, right, which is the previous 30-minute candle lows, could be a great opportunity to enter, right? And if you could have entered up somewhere here, then easily you could have caught some nice wins, right? So let's talk about where we could have kept our targets, right? So the stop loss would have been this candle high for sure, or maybe you can keep a little bit less according to 15 or 5 minute time frames, I would say. Like you can keep it above this candle as well, or just you can manage the trade after it flips this or these highs get broken on the 5 minute candle, right? So For me, it could have made sense for the pullback until this zone, but this was more than just a pullback, I would say, and we just kept going down, going down, going down. So once we broke these areas, next candle can easily continue till these areas, and that's what did happen. And once these areas were broken, next candle was also an easy entry if you wanted to take this easy entry. So after NYSE we got plenty of moves, and volume was there on gold for a very pretty much long time, I would say. So buys and sells both played out today, and overall we are still bearish, I would say, on the daily time frame. And you see this rejection right now for the daily candle, that just confirms us that we are bearish, pretty much bearish, right? Now there were plenty of opportunities, but once you got your trade and you got your money, you should protect your capitals. And I'm not telling to not trade after taking one trade, but all depends upon you. Like if you're comfortable taking the risk, and you got your plans and all those things, so you can do it. But if you are trying to be consistent, then take 1-2 trades a day, and that will just boost your confidence to another level, which you when you will see that you are ending the week in profits, so that will help you boost up your self confidence. And trading is all about confidence. It's not about technicals or charts or anything like that, but it's all just about having confidence in our setups, and you executing without any fear or emotions involved according to price action, right? So basically, this was the recap of the day. Now I'm gonna stop the recording, and I'll post the daily analysis video as well after some time. So see you guys there.